Hi guys, it's Ian from E2A Educate to Accumulate. It is Tuesday the 8th of Feb 2022. It's 10 to 9 in the morning in the UK. I want to run through open trades, but I also want to talk about the Canadian against the Japanese yen. I've just opened up a short position in that currency cross at 19.95. Again, similar to Aussie New Zealand dollar last night. It's not the strongest of signals, but the potential, the risk reward factor is very substantial, and that is the reasoning behind this trade idea. So let's get to the charts first. So here I've got my watch list. I break these down into also just currency crosses. So this is the Canadian basket, if you like. But let's have a look at open trades. Euro sterling. The dashed red line is the prime short entry. Now, you might see this level here at 84.59. That is where I've got my balance or my it was actually a trade that I opened up again. So I didn't just sell at 84.78. I got out, got back in again, etc. And I'm currently in at 84.59 and expecting quite a sustained move to the downside because of the euro resistance, not really sterling strength. We've talked about the fundamentals behind this, not really trading fundamentals, but we like it when they line up. So we had ECB President Lagarde turned into a hawk at the ECB meeting. That sent the euro dramatically higher, and euro sterling obviously moved to the upside. We're lucky enough to get a long trade on in euro sterling before that happened. However, reversed the trade call at 84.78. It's a technical level. It lines up with the baskets, and it also this time lines up with the narrative or the fundamentals, because Lagarde yesterday has sort of changed her tune a little bit. She's now saying that the only way that they'd increase interest rates is after they get rid of all their the rest of their QE, so their asset purchases. So that stalled this euro rally. And if we look at all the euro crosses, they are starting to come to the downside. So hence being short of euro against sterling, and also short of euro New Zealand here. This was the prime short entry, 173.72, didn't quite get there. Currently short at 172.86. Got decent target levels for both of these trade ideas. This one is all the way down around about 162, that's euro New Zealand. And if I go back to euro sterling, that was from a report that I did yesterday, 83.10. So we're looking for substantial moves to the downside. Also short in Aussie New Zealand, that's at 107.40. I got my short entry. Again, it's sort of big picture analysis. I'm not really too bothered about these short-term charts at the moment. Looking for this to play out. So in other words, and we talked about this yesterday, a potential 12.7 risk reward factor. So let's get to the Canadian yen cross. I'm just going to click on there for a minute and leave it. I want to go to the baskets. So the baskets, what I'm looking for two basket currencies to offer a bias in separate directions, looking at various different time frames, going out from a monthly chart, which is here, weekly, daily, 8-hour, 4-hour, and hourly. Now the dotted lines, or the dash lines I should say, are bespoke support and resistance levels, apart from the red ones. The red ones are what I call sink levels. So I'm looking for areas of support and resistance that could potentially hold back a sell-off or hold back a rally. And this dotted line here is a potential support level for the yen basket. And why is it a potential support level for the yen basket? Well, if I go to this chart, which is the 8-hour chart, you can see my dotted line. And this down here makes a symmetrical pattern. So potential for a move to the upside. Okay, not expecting it to extend past my bespoke resistance levels, but a correction higher before we see another sell-off to the downside. So that gives me a bias to buy yen. I now want a bias to sell a counter currency. And if I go to the Canadian dollar, okay, we've seen this move higher, and again off a sim pattern, so we're starting to move higher. What do we have? We have a dotted black line. So there's potential that this BC leg, and we always talk about the BC legs, is the hardest leg to trade, and often it will stall between 38.2 and 88.6%. So I put that on completely wrong. Let's just put that retracement tool on again, sorry. So here is 38.2% pullback of this level, of this decline. And you can see here the dotted black line is here as well. So I've got two reasons why Canadian dollar could potentially stall here and push to the downside. And that gives me my correlation between the two currencies. So I've got yen positive and I've got Canadian negative, and that gives me my CAD yen bias. Then I go to the CAD yen charts. Same scenario. We're looking at multiple time frames, trying to work out a bias with regards to this cross currency. And if we go to the weekly chart first, I'm not trading off the weekly, but we've got a very nice formation here. Okay, it's not extended to the downside, but it has potential, and we've got this confluence area. I can also see a wedge there if I wanted to place it on, and you can see the levels up here continue to find some selling interest. So that long-term chart is quite negative. Just going to get rid of the sync line there. If we go to this chart, and this is the 8-hour chart, again, this has potential to be a top in formation. And if that is correct, then the target level is down here, around about 88, the figure. So from current price, that's a decent move lower, info line. And that's what we're looking for. So we've got 3.2% move to the downside potentially. That's 297 points. So the risk reward factor, which we'll work out in a minute, could be substantial. But then we go to this chart, and this is really the key, if you like, to this analysis. So we've come higher in the BC leg. It hasn't extended. It looks like it's very close to 88.6%. The stop loss is above here. The target is down here. So again, risk reward factors coming in at really decent levels. If we go to the 1-hour chart, and this is just the last one, I want to show you how close it's got to the 88.6% pullback level. So it's clipped it, it's held it, it's looking quite negative. Rallies or spikes into that resistance level are continuously finding some selling interest. Now let's get to risk reward. So say we get short at current levels, and you really, I think you always want to be trading in 2 units, and I'll explain why in a minute. Even if it's you're putting £1 on, that's 50 pence and 50 pence as far as I'm concerned, or $1 is 50 cents and 50 cents. Or you need to be able to not just trade in 1 unit, because you won't get the bleeds, you won't get the decent moves in these currency crosses and currency pairs. So the initial target is potentially around about 7.7 to 1, with a stop at 91.24 and targeting this move down here to sort of 89.18, which is very good risk reward, don't get me wrong. But if we go to this chart, let's remember the stop 91.21. What if this one plays out? Let's get rid of that. Let's put a short position on. So remember 91.21 was the stop. So if we go to the stop level, 91.21, we've got a current price of 90.99. Let's put it in as 90.98. And we've got a target level of 80, let's call it 88, the figure. 88, the figure. Okay, 13. This suddenly expands even further. So you've got 1 unit at 7 to 1 risk reward. You've then got another unit at potentially 13 to 1 risk reward. Add those together, that's 20 to 1 risk reward. So you've got basically 10 to 1 risk reward if you're using 2 units. I hope that makes sense. So you're going to get 13 to 1 out of one, potentially 7 to 1 out of the other. Add them together, that's 20 to 1. Half it, because you've got 1 unit each, it's 10 to 1 risk reward. So suddenly your risk reward, instead of being 7 to 1, has jumped up to 10 to 1 if you're trading in 2 units. Makes sense? So that is the trade idea at the moment. Like I said, we've got 4 open trades now running in the live account, and we'll be back with some more analysis when I get it. So just to reiterate, we're using currency crosses or currency baskets, single baskets, to give us a bias. We're looking at cipher patterns, we're looking at risk reward, we're looking at executing around about 88.6% on these pullback levels, or on completed cipher patterns. Easy for me to say. All right, guys, good luck. Speak to you soon. Bye for now. Oh, if you like the videos, please press like in the YouTube channel. If you want to see more of these videos, then please subscribe. If you want to come in and join the chat group, it's Telegram, it's Educate to Accumulate. Many thanks.